Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Thursday, April 23rd. Firstly to the S&P 500, and here we see a continuation of the trend to the upside for today's trading, a candle making a higher high and a higher low. Importantly, extending the high past the previous major high, and therefore establishing a new major high at the 2120 level. Testing above the previous swing high at 2114 and the major high, but failing to close above there, and it does suggest that there has been a loss of commitment by the buyers up above that level with their inability to close above there, and it does suggest that there is potential for a change of trend. Now the other issue here is that we have a spinning top type candle that's formed, and that's a candle of indecision, and it does suggest also that there is potential for a change of trend, and that's because we have a much smaller body than we saw for the previous day, so we have a slowing of net momentum. Even though the buyers have continued net momentum to the upside, it's weaker than it was previously, but also we have the shadow on the top and the shadow on the bottom, and the shadow on the top represents the sellers losing commitment, shadow on the bottom represents the shadow on the top represents the buyers losing commitment, and the shadow on the bottom represents the sellers losing commitment. So we have this balance between the buyers and the sellers, and both sides are quite weak. And considering that the market is in an uptrend, it certainly doesn't bode well for the buyers at the moment. Now the important thing here is also the lack of strength of the sellers. So what we want to see, if we are going to see a change of trend, is the sellers show some strength and actually force the market down below the low of the current candle to establish a lower high and a lower low. Now the problem for the sellers is going to be the round number 2100 level of previous resistance, which now may act as support, as well as the 10% indicator trading just below there at 2096 and the 2093 level. So we have very, very solid support down below, but to the upside we have that major swing high and the major high previously just below the new 2120 level that may continue to hold as resistance. So what we need to see here for the buyers to continue to the upside is for the buyers to open very solidly tomorrow, taking control of the market, and then for the next day closing up above this 2120 level. In terms of Ichimoku, strong market, bullish in all three timeframes, trading above the cloud, above the Kijun-sen and the Tenkan-sen. So it certainly does suggest that if the buyers are strong enough, that the trend is moving to the upside in all three timeframes. And I suggest that if we do see the market come off, we're likely to find support around one of these levels, and then for the buyers to come back into the market and test through these major levels. But nothing should be taken as granted, and we should just be watching how the market reacts around these levels if we do trade there. Now moving next to the RRG charts for the various indices throughout the world. And what we want to see here are the indices in the top right hand quadrant, which is the leading quadrant, and this is basically relative strength against the S&P. So we're looking for the leading indices versus the S&P. And here we see the FTSE, which is the main one, and we've been watching that for a while. It's been in that sector for some time, and we can watch how they rotate. And if we watch the FTSE rotating through the weakening sector back up into the leading sector and never getting down into that left hand side, and it suggests that the FTSE has had quite a good strong relative strength for some time. But what we see is that it's been pointing down since reaching a moderately high level, and it means that even though it's in that leading sector, it's not accelerating as it was previously, and it seems to be decelerating, but still it is a leader. So the FTSE has been leading the S&P 500 for some time, probably for about the past week or so. If we look over here, the Nasdaq 100 has just moved into the leading sector, and it's outperforming the S&P 500, so perhaps we should start to look for stocks in the Nasdaq 100 rather than the S&P 500. Also, the Nasdaq composite here is leading as well, as we would expect. It's a bit broader than the Nasdaq 100. The weakening sectors, or the sectors that we shouldn't be looking at, XAO, the All Ordinaries Index in Australia, New Zealand, and the Nifty here, which has moved down into the lagging sector, and interestingly the Dow 30 has moved down into that lagging sector, but it seems to rotate in a very small area, so not terribly significant. It's very close to the middle there, but certainly underperforming the S&P 500. So the leaders here are the FTSE and the Nasdaq stocks. So just looking quickly at the Nasdaq 100 index, and here we see a stronger candle than we saw for the S&P 500. It's a much larger body. The buyers have actually closed with control, although weak control, but in a similar way that we had the S&P 500 testing above that major high and that very close by previous swing high resistance. We've seen the Nasdaq 100 test above there and then be rejected from that area, failing to close above. So once again with the Nasdaq, it does suggest that there is some loss of commitment above the major resistance level. Now, with this nice size of the body extending, it does suggest that the buyers are building momentum here. So even though we've seen rejection from that level, it certainly does look as though the buyers are attempting to go on with the move. And we should be watching the 44.83 level very closely, and there is a good possibility of the market trading through that level for the next day's trading. Now, if we do see selling coming, and we have this yellow highlighted zone of previous strong support and resistance, and just for the previous day's trading we saw that zone extending down to about 44.21 level, holding as support with the sellers losing commitment down through that level. Also just below there we have this previous support level at 44.21, previously holding as resistance as a major level, and also the Tenkan-sen indicator trading just below there at 44.14. So very solid support down below, an area of resistance overhead, a major area that has been tested, and it certainly does seem as though the buyers may be building momentum to test through that major resistance level. Now we do have a bullish market in all three timeframes, trading above each of the Ichimoku indicators here, with the Chikas band supporting the strong bullish bias in all three timeframes and suggesting a good likelihood of a test through the major highs. Just looking next at the bands here with the Nasdaq 100, and here we see bullish activity up above the upper band, with the buyers in control, the upper band holding as support for the previous day's trading, and at the moment the 44.32 level is where the upper band trades, and we should be watching there for very strong support. Moving next to the FTSE 100 on the left hand side, and we see a market that's trading up above the Ichimoku cloud, so a bullish market in the long-term time frame and the medium-term time frame by trading above the Kijun-sen, but trading just around the Tenkan-sen indicator. And for the previous day's trading below there and probing just above there on a bullish candle, buyers in control, but certainly looks quite different than we've seen for the Nasdaq 100. We have some congestion here, forming something of a symmetrical triangle. So a small symmetrical triangle or even a pennant pattern, and we're looking for a breakout in either direction, either up above, and if we see that, we'd like to see a bullish breakout, or down below, and if we see a breakout down below, likely to find strong support at the Kijun-sen indicator trading at 69.42. Now just taking a quick look at some of the asset class ETFs, and we're looking for those that are in that top right hand quadrant, and the one that we're looking at here, the only one that's trading in that quadrant now, is DBC. It's the Commodities Index Tracking Fund, and it is leading the SPY, the S&P 500 ETF, and suggesting that on a short-term basis that's the one that we should perhaps be allocating to, although this is on a daily basis. We previously saw the Shares Fund the World Index without the US stocks included, VEU is the code, outperforming, but it's now moving into a weakening area, into the weakening quadrant. So allocating away from that, and the ones that we shouldn't be in, and certainly should be allocating much less to, the gold sector, the 20 plus year bonds, TLT, GLD is the sector for gold, and VNQ, which is the REIT, the real estate sector. Now just taking a look at the DBC ETF here on the left hand side, and we see a breakout up above the Ichimoku cloud. So previously a bearish market in all three time frames, and now starting to out improve. And remember that that outperformance that we saw was on a very short-term basis. So a bullish breakout up above each of the Ichimoku indicators. What we're going to look here for is follow through, however, so we want to see continued bullishness. If we see selling coming in, we could see DBC fall down to find support at the Tenkan-sen at 1770, or even down to the bottom of the Ichimoku, or the top of the Ichimoku cloud, about the 1756 level. Moving next to the sector ETFs, and here we see the energy sector, XLE, is the leading sector, but it has been decelerating for quite some time, moving down potentially through into that weakening sector over the next week or so. We previously saw XLP, the consumer staples ETF, trading through from the leading through to the lagging sector, so one that we shouldn't be watching. Watching XLB, the materials sector ETF, looks as though it's moving into the leading sector from the improving, and one that we should be watching very closely over the next week or so. And XLK, the tech shares sector, is one that is moving through the improving and may soon move into the leading sector. Now just looking at XLE, the energy sector ETF, and it has been trading up above the Ichimoku cloud and each of the Ichimoku indicators for some time. Looking very strong here. The Chica band is supporting the upside activity, finding support for the previous two trading days at the Tenkan-sen indicator, which trades at the moment at roughly about the 8120 level. Congesting here, forming something of a small rectangle type pattern, being rejected from above the roughly about the 83.27 level, and that's going to be an important test for this sector ETF. If we see a bullish close up above there, we certainly could see continued upside momentum in this ETF. Over to the right hand side and trading up above the bands suggests that we have a very strong bullish bias in the medium term time frame, looking to the upper band at 81.81 to hold a strong support.